disclaimer, the full content of this program is for educational purpose only and should not be used as an investment recommendations. So that's the disclaimer part of this webinar itself. So before I carry on with the next 50 minutes of this ETF structures and things like that, can I just have a for me to understand a little bit about yourself, is that who actually invests in companies? Who, anyone of you all invest in a company and then totally forget about it because you are too busy, you basically didn't pay attention, so you buy when people tell you to buy, and then you bought the company shares and then you basically forget about it and leave it there. You don't even look at it once a month. If you belong to that group, can you please type a 1? If not, can you please type a 0? Okay, 1, okay. Oh, that's good. Somebody type a 0, good. Any more? Any more? Not many people respond. Okay. Who totally have not invest before? One, type a 2. Totally have not invest. Does not have any investment at all, type a 2. Okay, so everybody has some form of investment experience already. It's a question of a functions of whether how you all manage it. Like, some people manage it actively. Actively meaning to say that you basically go up there and you manage your portfolio on a daily basis. You buy and sell. You monitor your gain. And some of those, including myself, some of the stocks I shares and buy, I even forget about it. So there will be a bigger group of people, because in life we have so many things to do to cope with it every day. So we are not, unless you are professional investors, most of the time we we buy those shares and we leave it and put one side. Okay, so tonight I'm going to introduce about ETF, and that basically will probably solve one of the major issues, meaning to say that you start to invest in something and then you forget about it. You didn't even monitor, all right? You didn't capture the right time and that kind of things. So ETF will basically solve all this kind of problem. So tonight I'm going to cover basically 5 topics. I'm going to give a brief introductions about what is ETF, the benefit of ETF, and where do you actually find them. More importantly, which is the most important part, is that how do you actually construct an ETF portfolio, all right? How do you actually construct it and automate it? And then what we do is that we can actually gauge the potential returns by just doing the steps correctly above. So I'm going to share all these things with you in this tonight's webinar. All right. Now, so to begin with, what is ETF? So ETF basically is a basket of stocks that put together, right? So in a basket, you have a few stocks or shares that put together, and it can become a fund. And this fund is called exchange traded fund. In short, they call it ETF. So people will start to ask, hey, in this case, what is the difference between ETF and unit trust? Because unit trust is also about, having a basket of stocks that put together and you basically go up there and buy the fund. Well, the difference between ETF and unit trust are basically the same in terms of objective and functions. They are the same. The only difference is that unit trust, the price is not transparent. So it is not listed on the exchange. So whenever you want to buy a unit trust, you have to go through an agent or your bank. And typically, the price that you want to buy in a unit trust, you will not be able to see it until the order is being entered, right? You cannot get the precise price that you want. Whereas ETF, on the other hand, the fund is listed on the exchange. Your XGX, your Hong Kong Exchange, your Nasdaq, your NYSE, they are listed there. Therefore, the price is very transparent, and the price that you want to buy, you click and you buy, is exactly the price that you buy. Similarly, when you want to sell, it's the exact price that you sell. So that is the major difference between the ETF and the unit trust. But other than that, the function of a fund itself is basically a basket of stocks, right? Now, because of these special functions, and this function, because it's not new, but then the thing is that with the transparency of what ETF can give us, right, it becomes a very good tool for us to invest for long term, especially if you're investing for retirement or for wealth accumulations, or even if you want to retire early, you can actually use a very ETF to do that, to do that. So one of the easiest ETF that people talk about, you probably would have heard it somewhere or you read it in the newspaper, is the STI ETF. So what does it STI ETF means? It means that in STI, there are 30 blue chips company, all right? And this is a tree map that in front of you. The bigger square means that there's a heavy weightage. So like, for example, today, DBS, all the three banks has been reporting good profit. And you can see that the three banks, when the price go up, basically your STI index will actually go up, right? So when you invest in a STI ETF, essentially and legally, you own 30 companies, right? You own 30 blue chips company. Now, immediately you see the advantage, of buying ETF, right? Because unless you are, you are active investors, you buy into banks, you buy into Wilmar, you buy into Capital Land, and you monitor actively, in terms of the company progress, the news and things like that. Most of the time when, we all have some other things to do during daytime, whether it's a full-time jobs or whether you have some other commitments, it's hard for us, for most people, to follow up that news. So by buying an ETF, basically what you do is that you buy into the 30 companies and you just let the fund manager manage the funds for you, all right? Take care of all that AGM, rights issue, split, whatsoever. And the fund manager will do all this job. And all as an investor to do is just basically just to park money in that fund and let the fund grow by itself. So that's the very, very immediate advantage of investing in ETF. So if you invest in a STI ETF, basically you're investing in the Singapore economy, in the 30 blue chips company, right? So it's an index-based ETF. Now, there are actually more reasons to invest in ETF, right? So just now at the beginning, I asked you, I say, hey, how many of you actually actively manage your portfolio? Some of them say, yeah, we don't have time to do that. Exactly. So the benefit of ETF is actually more than what we started off, right? The number one thing is diversifications, right? And when I say diversification, it can mean a lot of things. For example, if you are investing, if you believe in Singapore economy, you want to invest in STI ETF, but you may also be bullish on Hong Kong or China market. Then you can go up there and buy the China or Hong Kong ETF. So meaning to say that you are diversifying in geographic by country, right? Hong Kong, China, or even Korea or Japan. You can actually go up there and buy the ETF itself. So that's basically a diversification. Second one is cost effectiveness. Now, when you go up there and buy a company shares, not only actively, you have to manage it actively, but you actually incur a higher cost, right? Let's say like, even if you're talking about a custodian account, $10 per trade, or even if you use Momo or Tiger, it still costs you money to do every single transaction. So let's say if you do, let's say 20 counters, then essentially it is 20 times 10, your cost of doing business is already $200. Even if you Momo, $2 times 20, that's about $40, right? And so besides the actively managed, the stocks and companies, the cost, for that transactions is actually quite high, and that actually eats into your, into your profit if your position is small, right? Now, the third thing is accessibility. Now, accessibility is a very important reasons why, you have to look into it very seriously, because in some market, in some stocks, you basically, that the market is growing, but that market forbids you to participate in the market directly, right? In my later example, I'm going to, going to share with you my view about China equity. All right, that will be later. But my point here is, for example, like China equity, it forbids foreigner to participate, right? And you know that it is a growing economy and you want to participate in those kind of growth, you simply can't do that. So the only way is to go through an ETF vehicle. And that's basically the third advantage. Now that applies to a country like Vietnam. All right, Vietnam is by the way, Vietnam GDP is growing at more than 12% per year, just for your information. It's hard for us to pick a Vietnamese company because we simply do not understand their business culture, the way that they do business. But if you invest in the Vietnam ETF, the country economy ETF, you can actually participate in those kind of growth with them as well. The fourth that I like most is transparency. ETF pricing in and out, you can see those kind of price very, very transparently in terms of the number of buyers and the number of sellers. And all these, when you open up your, your trading platform, all these information are displayed right in front of you. And you can actually go up there and do your own research on ETF by just Google, and there's plenty of information that will make available to you to make those kind of decisions. And the last point I want to make is flexibility. You can actually buy and sell whenever you want, as long as within that trading hours. You don't have to rely on your broker. You don't have to rely on to your agent to tell them that you want to sell your funds. You can actually do your adjustment accordingly. Now, because of this flexibility, right? Because of this flexibility, in the later part of my presentation, I'm talking about portfolio constructions, and this flexibility of ETF will comes in very, very handy. All right. So with ETF, we can do what we call team investment, meaning to say we can actually go up there and pick one subject, all right, to invest. For example, if you believe in e-commerce growth, right, we can go up there and pick e-commerce team investment, thematic investment on e-commerce itself. If you believe in blockchain, right, which is a huge growth potentials, you can go up there and invest in those kinds of ETF that's related to to blockchain. And that goes with many other things in terms of you can invest in the finance sector, you can invest in energy, you can invest in commodities, you can invest in REITs, all right? So there is many types of team investment that you can pick, all right? You can pick and you can embark onto, those kind of investment. Now, in today's world, team investment is actually very important, right? Because in the past, your broker, your agent, your RM will tell you, hey, you know what, Mr. So-and-so, Miss So-and-so, you should buy this fund because it will give you 6% per year. The growth is 8%. That sort of, message to you. But then in today's world, we are no longer be happy with this kind of so-called 5-6% growth. Not because we feel that it is too low. Not because of that. In fact, if they're going to net off 6% give to us, to be honest, for me, I'm still quite happy. The problem is that every time when they say 6 to 7%, they are talking about the pre-expenses, meaning to say that the fund actually make this kind of money. But then after they minus off the transaction fee, the management fee, the fund fee, whatever fee that the bank will take away, whatever they're giving back to you is the mere 2-3%. If you don't believe, if you are still holding any of the unit trust, and you try to do your analyze, actually the result is actually quite pathetic, or at least the one that I choose, even though I chose to be a growth, aggressive funds, the fund itself is supposed to grow in the region of 8 to 9%, but in actual fact, the return I get annualized over a period of time is about 4 to 5%, and that's basically because of many hidden costs that go behind, right? So back to team investment is exactly where I'm coming from, is that in today's world, what we want to pick, if you're on the growth, if you believe in the digitizations of the economy, if you believe there's ongoing changes, that means there are a lot of growth area for us to invest, and ETF is probably one of the best vehicle right now available to invest in these kind of areas, right? So with this, I want to jump to the topic that I have picked for tonight is about China equity. And this is basically about China, a company that's actually listed in US. In case for some of you who did not follow the news, what happened over the last 2 weeks is that China security agency came down very hard on China companies that is listed in the US stock market. And as a result of that, the China stock in general has fallen drastically. And over the last 2 weeks, is the money that lost through the stock market is close to more than $100 billion just wiped off overnight. So what happened is that China Security Agency now are stepping up in terms of in the name of what they call a national security. So China Security Review agencies are basically reviewing every company that's listed, China company that's listed in the US market, and make sure that they are compliant to national security. That's number one. The second thing that they come in very, very strong is the antitrust law, or rather anti-competitive law on China company as well. With this law, it actually forbids companies to go out there and acquire other companies. So for example, like Tencent has a lot of investment. I mean, the kind of investment that they have in other companies, there are more than hundreds of those, right? And some of those companies, they are duplicate. In other words, the products that the startup has conceived is same as the other company that is also conceiving, but Tencent will have interest in these two companies. With the antitrust law, means that they are not allowed to, Tencent will not allowed to buy them, concurrently, or to own both at the same time, right? Now, this is a very, this really have impact on Tencent itself, because when this antitrust law comes in and they are not allowed to acquire company or to invest in a similar company, meaning to say that, number one, even Tencent has the money, they can't put it in the right place. They can't invest in a place whereby they think it is a growth area. Second thing is that for the smaller company who has the potential to grow, they will not be able to raise money, right? Because startup always need to have cash flow, right? So they need money to grow. And because of this antitrust, that basically limit their ability to grow the companies. So with these two things come out, immediately you can see the market reacted, previously, I think 3 weeks ago, reacted. But what makes the market fall drastically is because of China Security Review says that it doesn't allow education institute to monetize their education program, like tuitions, development programs, and things like that. And they're not allowed to do that, and they have like 6 pages of rules and regulations that listed out all this. And as a result of that, all the education related companies all has fall off as much as 90%, So the thing is that this is not new to investors, but investors has been ignoring all this for a long time. So to the China Security Review Committee is that, it's like, we have really told you long time ago already, there's no need for me to reinstate what I have. The companies, the sectors that forbids foreign ownerships are basically high-tech manufacturing, defense, media, internet, and education. So that has been listed long time ago, but China sort of just stepped up recently. And basically, all these companies, including Baba and Tencent, they go through what they call a VIE, variable interest entity. It's a backdoor listing to list the company. Now, what does it mean as a VIE in short, as a shareholder? So today, if you go up there and buy a Baba shares in the US market as an ADR, you are not a shareholder of Baba at all. You are not a shareholder. Legally speaking, you are not. All right, because it's through a VIE. So that's why, because of this, the market become very, very worried, because you will never know that if government would want to say one day and say, you know what, we don't recognize all this VIE, and you know, if we have to screw you, yes, sorry guys, we are going to screw you. So that's why there's an outflow of money from the US market and moving towards the China itself. So all the money that was previously invested in the China company in the US market are now moving back to either Hong Kong or to China. So that's basically what is happening right now. Okay, so what is the kind of risk that is happening today is that people, or rather investors, are concerned if all these ADR are going to be potentially delisting from the US market. The situation can be real, okay? It's a kind of risk to do that. Second thing is that not only coming from China, but also from the US SEC as well, is ADR required to be audited by what they call the PCAOB. It's an auditing authority in the US. So far, all the ADR company has not gone through the auditing. But if US security is going to step up this auditing process, right, then it's going to affect all the ADR company, which is China companies that listed in the US market. So so that is a kind of risk that you know we are facing right now, or rather investors are having right now. So with all these things happen, and it is happening right now, even as we speak, what are the things that we can look into a solution, a vehicle to do this? Now, we know that they are very, very good company. They are continuing to grow. They are highly profitable. And right now, they are undervalued. But because of all these uncertainties, right, people say that, you know, should I go up there and invest in Baba? Should I go up there and buy Tencent? You know, that is really scary part. So the only way to mitigate the risk is basically move to ETF, all right? Because once you move to ETF, the fund manager will have the obligations to do all these things for you, right? So they become your so-called your proxy, you know, to act on your behalf at your best interest to, you know, deal with the kind of situations that you are in right now. So that is one of the way. Then of course the other way is that you know, coming to portfolio constructions is, you know, the exposure to China equity, we try to limit to a certain percentage. So in my personal portfolio, I will try not to expose my China equity to more than 30% of my total portfolio. So that is you know, what I'm doing. Now, the last part is that, of course, there's always a lot of risk in the market. And some of y'all will say, hey, you know what, there's so many risks in the market. We can sit one side and just watch it go, you know, for the time being. Yes, that is also one way. But let me also say something as well, is that in life, we need to move on. We need to continue to move on. We can't, because there's always risk. If it's not because of COVID, it's going to be politics. If it's not because of politics, there's going to be some natural disaster. You know, so every day, every stage of life, we will continue to face different kind of challenges. So if we want to wait for a best time whereby it's risk-free, you know, price is low and everything is good, and then we start to invest, maybe the day will come, but I guess we will probably miss out a lot more of opportunity. So we need to move on with life. The only thing is that we need to do is to make sure we manage the risk well. All right. So that basically comes back to ETF again. And this today, what's happening right now is a good example of why we should spend a bit more time to do ETF investment to build your you know, retirement funds, or, you know, retirement early, you know, that sort of things, or to build a wealth. Okay. Now, this is a news. This is from the Diplomat. This news is published end of July, July. So I'm going to stop here for a while. I'm going to ask you all questions. How many of you, all right, believe China tech company will grow for the next 5 years and 10 years? If you believe they are, type a 1. If you don't believe, type a 0. Okay, so everybody type 1. So all of you believe that the tech company is going to grow in China tech. So my point here is this, with the kind of political risk we are facing, the kind of situation, uncertainties we are in right now, there is a lot of tech companies is undervalued right now. If you are the one who do fundamental analysis and you can open up their financial reports and you read through it and you do your own calculation, you put a fair value into it, they are basically almost about at least 20% undervalued. Now, question here is that why we are not buying? Why we are not investing? Because of uncertainty, right? We also scared how we, if we buy already, if we drop further, how, what if the Chinese government will do a lot of things? So there's a lot of what if, So my point here is this, all this what if is valid, but we cannot, because of what if, that it will hinder us from moving forward. That's what I'm trying to say, right? And there is a way whereby we can mitigate it. I'm going to show you one of the ETF right now in Singapore market, and they are in the China tech stock. This is a Hang Seng tech ETF, right? The ticker is HST. When it was first listed, the price shot up to, I think, $1.80. I think it was listed last November or December. Its price went all the way up. Yeah, it actually showed over here. It actually shot all the way up to 180. Today price, the lowest it got was 106, and today it closed at, I think, 113 or 114. It's below its IPO price, and this is an ETF. Now, to look into this ETF itself, these are the company that it hosts: Meituan, Baba, Sunny, Tencent, Xiaomi, Kuaishou, Jingdong, SMIC, Ali Health. So if any of you that's not familiar with this company, doesn't matter. I'm going to summarize it for you, is that these are all very solid companies, right? They're making a lot of money, and they are the one who are pushing the boundary, the boundary of tax, right? Moving forward. For some of you who are already familiar with this company, I don't have to mention further. The top 5 listing over there, they are the company who is changing our life every day, or at least they are changing the life of the Chinese people in China, with these kind of companies, right? So what I'm saying is that the ETF right now is really come to an undervalue, and people are afraid it's just simply because of a political risk, right? So how do we going to invest in such ETF and to mitigate the kind of risk? There is a way, all right? So what we can do is to put all these things, design all these ETF into what we call a regular saving plan, all right? So instead of one time, even if you have $500,000, you're not going to buy one ETF at $500,000 in, right? That's not the correct way to invest. What we can do is that we actually can split it into tranches, and we start to put it through what we call a regular saving plan. And in today's market, what's available to us, these are the 4 platforms that has this kind of functions for us. So what it does is that you go to this platform, you pick the kind of ETF that you want to invest, all right? Then you assign an X amount of money per month. Let's say if you are putting aside $2,000 a month to buy 2 ETF on a regular basis. Then what you will do is that this platform will automatically withdraw the money, through gyro or some form of sending instructions, and then this platform will automatically allocate the $2,000 to the ETF that you want to invest. So with this, what we do is that we accumulate on either on a monthly basis or on a quarterly basis or a half-yearly basis. It depends. You can choose your durations, right? So the advantage of doing this is that, number one, the word saving means that you are putting money aside for a long-term purpose, right? So that's basically a saving. Second thing is that we will write out all the volatility, throughout the market. And at the same time, you can take advantage of all the growth accordingly, right? So this is actually one way to do this in what I would call relatively safe way, right? To accumulate wealth. You don't have to, put in one lump sum and then start to worry that if the price will go up, or in fact you will be happy if you go up, but you come down, then you start to get very, very worried about all these things. So like for example, the HST, people who actually invested in November, when come to January or February, they are very happy because the price actually shot up nearly like 10 or 12% by the time. But now you can see that they are basically underwater. So the thing is that if we would accumulate over a period of time, right? So at this point of time, you are basically buying the HST at a lower value and you're just sitting for it to come out from that, right? And that is one of the way to do it in what we call in a managed way. And second thing, with this RSP, it actually solved the problems that I have asked at the beginning of this seminar, is that how many of you actually buy and then you forget? And or basically you didn't manage your portfolio, right? So it's for busy executive like you, for busy person like you, by setting up a plan like this, everything will just do automatically. So you only need to look at the portfolio maybe twice or 3 times a year, just to make sure that it is being balanced and all the allocations are still in the right positions. Other than that, you basically just sit back and relax and let the platform and the ETF do all the jobs for you, right? So I can see that everybody are putting a 1 and say that China tech stock is going to grow in the 5 to 10 years times. So this will probably a good time for you all to say, now the price is low, you believe that it will grow, and we will continue to just buy on a regular basis. If next month, if it's going to drop by another 50%, no problems. You just buy another, on a regular basis. You keep on buying and then you just accumulate. After all, it is a fund. It's a fund. It is not a stock. Stock, your risk is 100%. Fund is, it depends on the basket of the stocks, in the number of the companies or the shares inside the basket, right? So that's basically the ETF. Now, in SGX, there are quite a lot of ETF. I'm just here going to show you some of those. You can actually invest in Brazil, China, Europe, Japan, Korea, Malaysia, through ETF. Pakistan, Indonesia, if anyone would like to look into those kind of companies, or even S&P as well. These are the ETF that you can pick from SGX. Now, I'm going to show you this is what we call an income portfolio that will basically give you a return to 4 to 5%. So investment objective is individual, right? To some of them, they would love to see a dividend payout on a regular basis, especially for retirees. They say, what, I need to have X amount of money per month. So I will prefer to have dividend to pay out, once every quarter. Then perhaps this income portfolio would probably suits, them very well. So the kind of combinations as a portfolio, given with the spread and the kind of risk, we can put, let's say, 50% on the STI ETF. That will basically give you in the region of about 3.3 to 3.4% per annum. Then you can put 30% on REITs ETF. So this will give you in the region of about 4.5 to 4.7% per year. Then you want to take advantage of the commodities, gold as a 10% just to stabilize the portfolio. And then maybe 10% bonds. These are basically construct based on what we call equal different asset class. That is equity, REITs, commodities, and bonds. This is basically is being divided in that way. And this kind of portfolio will give you quite stable of income of between 4 to 5% per year. And so that's suitable for, I would say, people who needs a regular income, right? Cash, they need the cash to spend. Now, on the other hand, if you are building your wealth, you are building your wealth on the growth stage and you are young and you want to capture, the growth in the economies or the market, you may want to look at something which is more aggressive, that is between 12 to 20%. So the strategy is that because in life, we tend to be, we want to be aggressive when we were young. And then by the time when we are closer to retirement age, whereby we don't feel that we want to take much of the risk, then we can switch a portfolio from a growth portfolio to a income portfolio. All right. So that is basically a transition. And how to do that? Of course, that go into a very complex self-study, and of course, I'm more than happy to help you all on that part as well. But the typical growth portfolio of 12 to 20% will give you, let's say, for example, 20% on Singapore stock market, which is STI ETF, and then 40% on REITs, all right, 40% on REITs. Then maybe 20% I will invest onto artificial intelligence, ETF. Then another 20% to S&P 500. So with this, basically what I would expect to have is that I will have some money, because that will come from my REITs DPU from this ETF. I will have some money as a regular income, but at the same time, I'm capturing the growth on the US S&P market and artificial intelligence. So this is basically a dual engine kind of a strategy to be able to move to partial, a small part of income, but mainly on the growth side. So this is a kind of growth portfolio that anyone can actually go up there and construct it. Now, to give you a perspective of a growth income and a growth, let's say supposing we are talking about $1,000 a month on a growth portfolio, 10 years time, the total investment is 120,000, but the return, including the dividend came up, it will give you the total value of about 156,000, right? So don't look at it as if like only just $1,000 a month. Over a 10-year period, you can see that the cumulative is actually very solid. On the other hand, is that if you are looking into a growth portfolio on a 17% growth, same thing, 10 years is $120,000 investment, but the return that you're expecting will be close to $316,000. So that's really a remarkable thing. And the RSP is such a good tool that I can't stress enough that this actually helps to save at the same time to grow the wealth at the same time. Right. So here we are. I am putting a lesson plan together for everyone who wants to go into details on ETF, because again, yes, ETF in a broad view on a high level, you look at it, it is a good tool. But then again, how to pick the correct ETF, how to choose the different type of ETF, what are the type of ETF that you should avoid, what are the ETF that is basically, although it is a risk mitigations, but they are also so-called high-risk ETF. How do you actually move away from it? So all these things is going to be covered in my day one lesson. It's a 2 hours lesson next Thursday. ETF overview, goal focus, how you set your goal, and how you actually, by setting your goal, how you actually, construct your ETF portfolio that meet your goal. Not my goal, not your friend's goal, is your personal goal, how you actually do that. And then asset allocations, how you actually do your assets, form your portfolio well. Factor to consider when decide different asset class, and the risk management. So this is basically the lesson plan, the very first thing that you need to do. Now, the second day is a workshop. All right, so the lesson is actually on the Thursday. The workshop is on the Friday. Now, this is basically a step-by-step guide, because the whole of this program is this, is that it's not something for you to learn after that you turn off your computer, you go to sleep, and then you forget about it. And then, no, that's not the whole point. The whole point of this is that day two, you will basically work on it right now during the class, and you start to make a ETF selections, step-by-step guide, choose the platform that you want to invest. If you do not have an account, open an account, you create a portfolio, and then you start to learn how to optimize the yield. All right, it's not just buy and then you put a basket of ETF together and say, oh yeah, finish. Doesn't work this way, because just like your car, just like the things that you do, they are what we call optimization, meaning to say that you really need to tweak, here and there to make sure your portfolio is always balanced, and it will always focus on the goal, right? The goal that you have set, right? Now, because all these things are what we call a very customized things, it only, whatever that you work is only for yourself, right? Through this whole process, and you get the best out of it. You get the best out of it, all right? If you just copying trade, usually it won't work. It won't work very well, and most of the time, when you copy for halfway through, right, then after you lost you just basically lost it. So anyway, that's the workshop on the day 2, right? These are the 2 days program that I put together for you all. Now the program itself is $188. Now day 2 class is supposed to be a physical class that I have a classroom, I'll see everybody, but because of right now there's lockdown, I will not be able to do it, so I have to move everything online. So that is basically, I will guide you all online, one by one. At the same time, you all will actually start to create a portfolio. A real portfolio is not something that is a game, but it's rather a real one that you can actually walk away and you start to use this as your investment. So make up your mind, make a decisions, determine to invest, determine to hit your goal, a hard target that you want to achieve. So that's basically the day 2 lessons is going to be about. Now, at this point, I'm happy to answer any questions you have. If you sign up for this course, to sign up this whole program, basically you scan on the QR code that will lead you to the sign up page. There is a $20 discount for thanking you all for coming in tonight, spending the night with me here on a Thursday night. Use a promo code ETF Focus when you sign up. And then, yeah, that's basically, that the total price will be, 188 minus $20, you will get 168 in total. So that's the program for 2 days. And I can assure you that this program is definitely worth it, because with choosing a right ETF and, making a right decision on ETF, you basically can make the money back within, I would say, 2 weeks in the right market. You can actually make that return back very, very easily. So this is basically the program I have for everyone. So at this point, I'm happy to answer any questions that you all have. And then, yeah, I'm open to the floor. You can unmute yourself. You can type on the chat group. I will be more than happy to do that. Yeah. Oh, can you repeat what's on day 1? Thank you. Okay, sure. Day 1 is, so day 1 is basically the foundations, whereby I will go through what is the ETF overview, the different type of ETF, because ETF itself has different classifications. I have to make sure that what are the things that you need to avoid, what are things that you must do. Second thing is goal focus, meaning to say you have to set a goal, a hard target to achieve. Now in life, we all have to set up target. I don't believe in free and easy. Even free and easy, you also have, you have destination to visit, right? You have a hard target you want to, visit. So goal focus is basically you set your own target. And then after that, you go for asset allocations, things that you love, things that you're passionate about, things that you can actually allocate that kind of assets into it. Then factor to consider when you decide what is asset class. So what are the things that you need to consider? And then of course, the final one is risk management. So the first day is more of an overview lesson, to build a foundation knowledge that you have, so that when you read, that means after this class, you read articles or you hear from other people, at least it gives you a very strong foundation of what you already know, right? And then you sort of like build your knowledge from this point onwards. So this is basically the day 1. Day 2 is action, right? Action meaning to say that when you finish from this day 2 lesson, right, you are going to walk away a portfolio that you're going to invest. That's what I'm going to say. So if you have not done anything like this, then you should come to day 2 and walk through with me, and you basically hands-on to do it. That is where I'm coming from. Yeah. I'm not be able to mix up these things in August. I don't have any date for the next lesson yet. It will probably be next month. It will probably be October. So it will probably be October. Let me just get the link up to you first, so that you can have these things. ETF. Okay. Copy. Okay. Paste. Now this is the link, right? Yeah, the next one will probably be October, and yeah, it will not be anytime that soon. That's basically in October. Can remember to use the ETF Focus code to enjoy the $20 discount. Anyone, do I sign up through FG? Will that session be recorded and playback? Yes. When all the sessions, all the 2 days lesson will be recorded, you can always play back to to refer into it if you need to. As a bonus, like what I did to other classes as well, I invite all the ETF Focus trainees to my US stock focus Telegram group. So the reason why I want to put into that group is, for some of y'all may say that, hey, you know what, I want to invest in the US market, but I don't have the time to manage, but I like to only invest in the ETF. Now, but I do not know some of the companies in the ETF, are they good or not? So when you are in the US focus group, when we talk about individual companies, whereby we deep dive into companies, you all can become the so-called passive listener. You see how the discussion goes. And that will actually help you to build your ETF portfolio by looking into those holdings as well. So that group is a lifelong support group. So meaning to say that when you go in there, this group will continue to be there to support you. If you have any questions, I'm more than happy to answer the stocks itself or the ETF itself, right? But of course, if you say that, hey, I want to invest in the US stocks directly, then that's a completely different subject. Then you have to go to the, the other program. But ETF is actually good for those of you who are, as I say, busy executive, and you want to invest and you want to make things easy for you. Let's put it this way, most of us, in fact, like including myself, and you want to look at companies to invest, actually this process can be quite tedious. So if there's an easier way to automate things for me, why don't we just use it, right? Why don't we just use it? So for example, I will give you an example, like, most of us, we invest in REITs. I invest in REITs as well. But slowly and progressively, I'm moving from individual REITs to REITs ETF. So I only keep very, very good REITs that I love until death. I will kiss them, I will hug them, Other than those few REITs that I love it so much, most of it I will just put it to ETF. The reason why I want to do that is because I can free up my time on doing REITs, which is very mechanical. And I can spend my time to look into company in a high growth area. For example, cryptocurrencies. These are the high growth area that I would love to spend time to learn that and to capture the growth. So it's about my time management, and that's me, right? That's me. So for you may have other interests or passion or investment. So don't spend too much time when you have no passions to look into company. So ETF is probably the best way to help you to grow your wealth in that manner. So that one, you have to be honest about what you are doing. Well, that's my personal take. Okay. Any more questions on ETF itself? I'm happy to answer any question at this point of time. I mean, I have, before we knock off at 9 o'clock. Any questions? Any ETF that you all are investing right now and you want to ask my opinion, I'm more than happy to answer as well. Yeah.
Jimmy.
Yes.
Beside the HST, have you ever considered 3067?
3067. Let me just.
It's the same, right? But it's just that yes, there's exchange rates and all this involved. But I thought the one managed by BlackRock is more more established.
Okay.
And lower expense ratio.
Okay.
Yeah.
3067. Is it listed in Hong Kong?
Yes.
Okay.
So I wonder whether have you considered this, and why wouldn't you invest in this? Yeah.
Okay. So like for example, the one at HST, like OCBC, is listed in two currency, Sing and USD.
Yes.
Okay. So I picked the Sing, the HST.SI, and because I don't want to bear the FX risk. Okay. So right now I'm looking your 3067. I believe it is in Hong Kong dollars.
It is.
It is in Hong Kong dollars. So my immediate answer to your question is that if you have Hong Kong dollars in your account, use it.
Okay.
Right? But if you are using Sing dollar to exchange to Hong Kong dollars, and then you change it back, the spread itself will eat up your gain. Your spread.
Okay.
Yeah, because currency exchange, you know, right, B&Rs is one price. And then when you sell, right, B&Rs is another price. Yeah. So
you think this will overweigh the lower expense ratio and
correct,
also okay.
Correct. Yeah, because expense ratio is 0.25. I think HST is 0.
I think it's 0.65 or something.
0.65, yeah, correct.
Yeah.
And then you currency exchange easily is 1%. Yeah, unless you go through I mean, not these days, the platform like Momo and Tiger, the FX is actually quite good. But still, you are, you know, when you buy and sell, the difference is already, you add up about 1%, not worth it. Okay. In my opinion, yes.
Can.
Yeah.
Got it. Okay, thanks.
No problem. Yeah. I'm interested in the Iran Dosmo ETF. Can we review the available risks in Singapore investment if they are worth our investment? That would be great. Yes, definitely. More and more people are actually asking for this Iran domicile ETF. But my question back to Caroline Yu is this: is that I will assume that you like the dividend payout. That's why you are looking for Iran domicile, because the withholding tax is 15%, 1.5, as compared to US is 30% withholding tax. And the only reason why you will have this 30% withholding tax is only because you are collecting dividend. Right? If you are not worried too much about the dividend, you're going about growth, then it makes little sense. All right. And second thing is that in the US market, the ETF, the number of ETF that's available is more than 4,000 ETF to date. Let me see. No, sorry, I take it back. There are more than 8,000 ETF that's listed in the US market. All right. As compared to those that listed in LSE, the numbers cannot be compared. So I will agree with you. If you are looking into, let's say, world global ETF, you know, then you want to look into this Iran decimal ETF. Yeah. Okay. Yeah, income. Yes. So yes, I can go through that. No problems. That is one of the choices for income portfolio. Well, the recent listing of YYY should be investable if we are optimistic in China or there are similar stocks. Yes, correct, Lionel. So the thing is that if you see that the holdings are similar, then don't invest because it's not, you know, why are you going to duplicate your, you know, your holdings? And then when you construct your portfolio, right, it seems to be balanced, but actually it's unbalanced. So don't do it. So I usually look at what the top 10 holdings, or at least top. In fact, I will look at top 25 holdings as a whole. Or minimum, you have to look at top 10 holdings and make sure they don't duplicate too many of those. Yeah. What do you think about China OCBC leader? Now, it seems like there is a stake in the Tencent. That's exactly Wenjie is exactly what I'm trying to say. You know, when there is too many of the duplicates, I want to avoid. And especially when this OCBC leader ETF launched in the time when the price is higher, the par value itself is already high. So so don't seem to be worth it. Whereas the HST right now, it has run for a period of time already, right? For nearly like 9 months period. So I can more or less gauge that it is already there already. Yeah. So HST to me is still a better buy compared to China leader, in my opinion. Okay. Okay, so if there's no question now, thank you very much. Now, if you you know, like to attend this this ETF Focus, I urge you all to sign up, scan the QR code. If not, I have to log off now because another sessions will be coming up at 9 o'clock, so I'm overrun by 1 minute. So you all take good care of yourselves, stay safe, and I would see you all soon. Bye-bye.
Mr. Chai.
Yes.
Do you have lesson conduct in Chinese in Mandarin? This ETF class?
I don't have. Do you want me to conduct one? I mean, I'm more than happy to do one if there's a need lah.
Oh, if you have Chinese class, then I will join.
Oh, is there a reason why you want to prefer to have a Chinese version?
Because I'm a Chinese educated, my English is not good.
Oh, okay. I'm a Chinese also. I'm okay. Okay, so this Shaman, is it? Can you drop me, or can you drop me an email? I just type my email here, and then
Okay.
This is my email address. Just drop me an email, and if there is a need, then I will just basically do a class on Chinese lah. Yeah, but it will be a very small group.
Yeah, I think many people, some may have liked to attend the Mandarin.
The Mandarin version. Understand? Yeah. Okay, I may design one